Mic check. Hello, mic check. Mic check. Hello, mic check. All right, mic is checking. All right, welcome back, guys. Hope you guys are having a great morning, as I am having a great morning. I just got my daily coffee ready. My cousin from Mexico just came unexpectedly, like usual. But that's good news. So, um, let me make sure my camera is good to my face real quick. Let me bring some more lighting in the back. Okay. Well, as you can tell of the title of the live, we are doing the building a strategy from scratch, trading strategy from scratch. And I was just looking at price action when I woke up today. And I remember writing out this daily fair value gap, right, which is just a green box zone where price can be, I guess, somewhat of a demand zone in simple terms. But I remember we're right here when I first started doing this series, I'm pretty sure. And the market had almost reached into the top of the daily fair value gap, right? But we can see if we zoom in pretty closely, it never actually touched the top of it until right now. So I think that's worthy of noting just to start this video. And one of the things my trading strategy I think might be a little confusing is whether I should keep the AM highs and lows, PM highs and lows that we have labeled, right? There should be some certain set of conditions where if this were to happen, then we delete it. Or if this were to happen, then we'd keep it, right? So I've been trying to figure that out, but I think we're just gonna delete all this, right? Because technically we've already delivered on pretty much everything. Right, we've even gone below 830 CPI data low. Right, we've taken out these aim lows, so we're way below all the AM and PM highs and lows. So, with that being said, we're gonna be doing the usual, and we might add another one just from like yesterday's, just to see a reference point. But we have 9:30 to 10 a.m. right there. And going from left to right, we see that we do have a first presented fair value gap here. But since this is the 9:30 a.m. candle, that we can't use the 9:29 candle to include that bullish fair value gap. So the actual real first presented fair value gap in the morning was a bearish one. And then just judging off of this, right, we can see that this is our high, our low. I know this part gets really boring, but must be done. We need to see what price points. So AM low, bam, AM high. So now that that's labeled, we have first presented fair value gap. And let's just take a quick look at what happened, right? So we have a first swing high, swing low. That liquidity gets taken right here. This liquidity gets taken, right? Market comes back up. We have a sell side imbalance right here, also with first presented fair value gap, right? We ended up taking AM lows already. So far, we haven't taken out the high. Market comes back up, back into the first presented fair value gap. I really like how we went back to the middle. Sells off again. Market then at 11:10 reversed from going down, now going back up to up. Right, and this is the type of things that we're looking for, like this type of candle right here. Using this AM low as support, back into that first presented fair value gap at the very low. Also another thing, keynote. Then dropping again, right, back to almost these lows again. And now what we're gonna do again is label the PM opening range, which is 1:30 to 2 o'clock. And we're just gonna be doing the exact same process again. And what I like about this one is that we have two highs that are right next to each other. So this one would be PM high, 818. This is our low right here. PM now low. Boom. And now we have one more thing, and I'm guessing you guys know already at this point. We have the first presented fair value gap. And that is it for our levels. Right. So now that we see this, this is our full price action chart for the day. So based on our strategy, hopefully my strategy on my screen is working here, but on the bottom left, we see that we don't trade on CPI or FOMC days, right? Because those are very volatile days, and our account can get wiped if we're not careful and disciplined and not over leveraging. We can also see, okay, we marked out 9:30 to 10, high and low, and also for the 1:30 to 2, so we're done. So we can actually come to my little program that I made, and it looks like it's not. Oh wait. Okay, so we can see it's now highlighted yellow, which is pretty cool to me, you know. Technology is getting crazy. So we have first presented fair value gap between the windows, right? So we labeled that no entry until the window closes, right? So we technically don't have an entry, and we'll actually label out the 2. So anything beyond here is where our entry point would be, because we're waiting for 2 sides of liquidity to enter the market first. And we have done that. So we have the high and low, right? So we've taken out the low, we haven't taken out the high and the high. And we also, I think a very important part is also, like, sure, even though these liquidities have yet to be taken, right? We still have to be careful, because does the market want to take that out today, right? Especially thinking about what time it is right now. It's 2:53 p.m. Eastern Standard Time, right? The market closes at 4 o'clock. Sorry, I'm just making sure that's right. Yeah, because it'd be 1 p.m. for me, so 3 hours ahead. That'd be 4 p.m. Eastern Standard Time, right? New York time. So even if it doesn't want to reach all the way up here in 1 hour, where can it reach to? Right? So I'm asking myself the question again. And let me see. So if I were to be bullish, where should the market want to go back up higher? And if I was bearish, where should the market want to go first before going back down lower? Okay, so based on our strategy, all we're looking for is a break of structure and also a fair value gap. So I've always been able to identify that when it comes to shorting, right? Because our strategy consists of using existing highs and lows. So for example, we have higher highs and higher lows forming, right? But then at a certain point, the buys aren't, or the buys stop working, right? And then we make a lower high, and then the market makes a lower high based on this high up here. This one's lower, and then it starts really dropping down lower, right? So it does like a reversal pattern, right? So our objective is to identify either when this, for example, would for sure be this. Is there a way that I can collect all this? That's fine. But this higher low that we have, the highest low on this beautiful graph, would be this one right here. And what we're waiting for is to see whether this gets respected, right? Because we don't really want to go lower than the lows, right? So we can see that price disrespected this one. It came back up, tapped it. You know, there could be a fair value gap in there with that break of structure. And then price keeps on going lower. So what we want is to do the exact same thing, but on the opposite side. So in my mind, I'm kind of confused a little bit. I'm not gonna lie. So we're gonna actually, so basically, in other words, what we're looking for right now, if the market conditions are right, and it actually wants to do this, right? So we can see that we're in a downtrend, right? Right now, currently. We keep on seeing lower highs and lower lows, right? But then at a certain point, you know, that just stops working, right? We could see like a drastic move down lower where everybody's like, oh, like it's going to keep on going lower, right? And then a lot of people get faked out on this pullback up here for then it to, you know, just drop down lower. But let's say finally price then made a higher high, right? So we're waiting for a higher high to get broken, come back down, right? Because we have this get retested, right? This higher high. And then also what we're also looking for inside of that is a fair value gap. Right? And if we don't have any of that, then we don't take a trade. Does that mean I'm not going to take a trade? Probably not. I probably am going to take a trade, but those are our best conditions that ensure that we're making the right calls, right? So this is what we're looking for. Very simply put, we're waiting for the market to finish doing its downtrend movement. Ideally, we would want to see a very drastic move down lower, right? That would cause a lot of fake outs, right? Manipulation, you could say. We're waiting for the market to then, ideally, we want to see the lowest high get taken out over here. So ideally, it'd probably be this one, but that's still fine. We can see the pattern, but with that being said, we're waiting for a higher high, a lower high get taken, right? So instead of a higher low, it's a lower high. So lower high taken, break of structure, potentially, right? Then plus fair value gap. What the heck? Plus fair value gap or SIBI or IFEG. Right, so that's essentially what we're looking for. So we can get rid of these. I just want to make sure. So we're looking for a lower high. Right, this is a lower high. Get taken. Come back down, retest into a fair value gap. So let's try to find that in our chart. So we have high of day. Market dropped. We made a low. Market then goes back up, right? So lower high. Market comes back down. Lower low. A lower high. This high never gets taken. So we're still creating lower highs, right? We're coming down like our trend line that we just drew. Market comes back down. Lower low. This would be our lower high that we're looking to break, right? And then we see not a whole lot down, but enough to fake trade us out. See, market comes back up, down, right? We still haven't taken out the lower high, and I guess we can also just label the most recent one, right? And let's get down into business here. And so we're essentially looking at this one, right? But I like to look at the range that the market created these lows, right? So the down movement. So this one could be included, so I'm just gonna mark it out. But essentially what we're making or looking for is this higher low to get swept. You can see the market then does that, but then at the same time using the same low to make a retracement back into it. And what I'm trying to see is where is our fair value gap, buy side inefficiency. And sometimes maybe there's not any, right? Because let's say this broke right here. And I don't usually use market replay, but in this case we are. But let's say price never did anything. Or we're barely watching this live. So as I'm watching price, what I would be looking for is to see whether this sell side imbalance gets broken. I guess this top one too, right? And I'm not really sure how to go forward. I guess forward, boom, right? So what I'm looking for is for this zone to act as an inversion while also taking out this high. Okay, so right, because I guess our entry could have just been once this breaks, but I want to see the market come back down into a fair value gap. So I guess right here could have been our entry using the AM low as support as well. So even though we might not get the best price, we also are creating this higher trend up. And then I guess what I would want to target is these highs, but we're not necessarily trying to look for a trade setup in here, but that's essentially what we're trying to do when it comes to looking for buys or longs. But let's see, let's go back, get out of market replay. So if we were to take that, market would have then came back down into that, right? Also using the AM low into the first presented fair value gap. So overall accuracy was good, but not enough. I wouldn't say not enough points, but very short-lived. And now we're back here. So here we can see same thing. We have this high. We also have these, right? We're just making lower highs right now, lower lows, right? So lower high, lower high, lower high. And let's see if we make another lower low. And then within this, right, we have a bullish fair value gap, buy side inefficiency. So now what we want to see is whether price wants to support this level. And now what we're looking for is, I'm sure you guys already guessed, the lowest high to get broken. So lower high. Because we have lower high, finally got broken, and then drops, right? And these also were lower highs. So this is our lowest one that we have to date. So now we're waiting for that, right? Where did I put my coffee? Boom, boom. All right, I look away for a second, the lower high gets taken. So now we're looking for whether price wants to show us willingness for the market to strongly react higher. Right, because the closure under that lower high can be shown as weakness. So we want to see a closure above this lower high. And right now, based on what we're seeing right now also, I see that PM low is still not being hit from these prices right here. So that could be a sign of weakness of even wanting to reach that level right now. Doesn't mean it won't, but based on what I'm seeing, it's like, we didn't have enough juice for us to go back down in there. So you can tell what we're going to do now. Obviously, I could be super wrong. I'm just, observing, trying to see what works and what doesn't. So this is not financial advice, right? Just you do your own research, but I'm just documenting on what I'm seeing and what I'm saying, and to see if it comes true. So another one time we hit that lower high, barely go above it. Now making a retracement down lower. And what I'm gonna mark out now also is 315. Could be that or time micro, time macro, time macro. Dang, I keep on pronouncing micro, time macro. Right, market starts doing its thing at 315. I guess you just have to go back in your charts to see if that's true or not. But 315 to 345, we have those 30 minutes that the market likes to do some things. So we want to see if whether this candle, ideally we would want to see just green now. But whether this candle wants to go higher and close above that lower high. Oh, you know what I just noticed, guys, actually? See how the bodies of the candles are staying above that 1 minute per rally gap? Alright, so I mean, this is like making me itch for a trade, I'm not gonna lie. Just seeing these bodies just stay here, but we're gonna stay here and see what happens right now. Yeah, but I really like how the bodies of the candles stayed above that. I'm gonna wait about 3 minutes just to see what these candles do. But I am looking for longs maybe right here. I need to make sure that I signed in actually too. So looking at our previous account, right? So we've still only taken one trade. That first video that you guys saw, trade number 1, still in there. So we have yet to take any other positions. So this will be our second trade. Okay. So what I'm trying to see is like we have no fair value gaps within these price points in here. Right, so there's not necessarily a trade to be taken. I wanted to take a trade, but that would have been following my rules. It was just based on a little bit of feeling. But what I'm trying to see is whether price wants to come back down into this fair value gap in here. If it does fail that, then could see price going higher. But I labeled this because this could be a potential 1 minute bullish order block. We're anticipating, but without anticipating. So we'll just mark out this, right? So order block bullish question mark. Doesn't look like it's going to be, but now we have this low get taken out. So ideally we don't want to see that. Our next line would be right here. So we want to see this keep on creating this trend line going up higher. What I would want to see. So this low, we have this low. Right, so hopefully price can keep on using that as support. So this was not an order block, right, because it would have been this as a whole. We can see price went way below it. And now that 315 is hitting, I do want to see whether the market wants to do something here, and I will enter a trade. So yeah, this could either really react from here or just keep on chopping, to be honest. And I'm not sure if there's any news going on today. That'd probably be a good idea to check. That could give us a bump of volatility. So we can actually use a website called Forex Factory. And this give us every single day's, like news events. And what I see is that we don't really have anything major, so doesn't mean price can't move a lot, but we shouldn't expect it. All right. So the reason I label this 315 because that is when the market likes to start doing things during these 30 minutes. So I'm looking at this higher high, higher high, higher high. Market drops. I think if it reaches down below here, I think it's just a free fall type of thing where probably this low will get taken out as well. But I kind of have like the urge of just placing an order here, but at the same time, I'm not really sure. So I'm gonna draw this one more time because I think this might help me. So I'm looking for, right, so I'm identifying whether we're in an uptrend or downtrend because that's gonna tell me whether sell program conditions are working or buy programs conditions are working. Right, so right now we're in a sell program condition. Right, so bearish fair value gaps should be working. We should be creating lower highs and lower lows. right? So boom, boom, boom. And then what we're looking for is a lower high like this, right? So we're waiting for the market to stop working on sell conditions to stop working. And then we finally take out this high, this lower high. So what I'm seeing is right here, we have a lower high right here. It got taken out. Ideally, we don't come back down all the way down here. Like a nice 50% retracement discount would be nice. But then we're looking for it to come back down. And then now we have our buy conditions or buy programs working. So that'd be bullish for value gaps, making those higher highs, higher lows. So this is a little bit tricky because, we had a movement higher, but then a retracement after 2 p.m. We had another high. This high failed to take it out. Comes back down. Could be that this is just another retracement. Just like how we had this move higher, retracement. This move higher, retracement. This is what we're looking for right here. Something's telling me to go short. Could be wrong. So this is where our stop goes into play. Ideally, we just don't want to see this getting, this would be our lower high being taken. Wow, what a candle. Just target that. And if we're wrong, we're just completely wrong. Wow, right when I enter, that's so weird. But I placed my stop right here because ideally, if we are wrong, this is where I wouldn't want to see it reaching into. We could move it up here. That'd just be extra money that we're just losing. So I doubt the market will reverse here, so let me actually get rid of these drawings real quick. Oh, my camera died. What the? So we got taken out. Obviously, we were wrong. It's totally fine. You know, because this is just all practice for our evaluation. And I knew that, okay, not obviously this is after the fact, but I knew that, you know, we're probably going to go up, but I don't know. It's just something right here just told me that we're probably going to go lower. Do I want to enter the trade now? Hmm. I don't know. That's a hard question. I think so. I don't see why not. This would just be our, because on our evaluation account, you get $2,000 in drawdown, and our loss right there was like 30 something bucks. So if we go to order history, right? So each contract takes 50 cents right, on a micro. So that's $1. We just lost 35 and a half. So that's 36 and a half. So that's $36.50 that we lost. So my max lot stop loss for a day would probably be, you know, probably $100. So I think what I need to work on is listening to myself. Right? Because for some reason I traded just based on feeling, like, oh, I feel like the market's gonna drop here. Which, you know, your feelings can sometimes lie to you. I feel like sometimes, because logically the market should go higher. I just didn't listen to myself. So what we get based off of trading off a feeling and being wrong is losing 36 bucks and a half. All right, so this candle started our bullish for rally gap. Targeting PM high would result us in $53 and a half. Targeting first presenter for rally gap would net us 151. So I think that's what we're gonna go for. I really don't like taking trades like this, you know, going from selling to buying or buying to selling, you know, having a double-minded. But I think as long as you have a good risk management and you're not risking too much money and you're over trading, you know, because after this trade, I don't think we enter the market anymore. No, why not? What the unfortunate, unfortunate first trade, but that's why we paper trade. Because if that were real money, I'm sure we'd be entering immediately right after that and trying to making that money back. So I think it's good that we're doing this paper trading and, you know, getting sample trades. I actually need to mark that in my journal so I don't forget it. Watch, you guys are gonna see the win rate expectancy go lower since we lost a trade, which I think is pretty cool. So we risked, what was it, 35 and a half, right? And the result was minus 35 and a half points. Well, 0. Right, so we risked 35 and a half. We didn't make anything. We lost it. So negative 1R. Log it. So now we have a 50% win rate. Right, because we've only taken 2 trades. 1 won, 1 lost. Boom. Now our expectancy is 1R. So right now, for every dollar that we trade, we either win that dollar or we lose it. And our profit factor is 2.54, which I need to do my study on that because I'm not really sure what that means. but I know it's important. So we actually did not move our stop past invalidation. So if we had our stop loss up here, we'd have actually been negative 50 something. So I think we did good on that part. Break of structure and fair value gap and premium discount. We are in discount. So we didn't really do that to the best of our ability. Okay, so let's see. Boom, lower high taken right there, right? And look at this. Fair value gap. Boom. All right, break of structure, lower high, right? We're making lower highs. Boom, 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 right? 1, 2, 3. Lower high gets taken, creates a fair value gap. Price comes back into it. And now hopefully this would be our trade setup and we go higher. I'm trying to just see how I feel right now. Um, I'm trying to stay calm and not caring about the outcome, whether I was right or wrong. And I think that's one of the things that I struggle with, especially when I had this old account where if I lost a trade, I'd immediately go back in there trying to, make it all back, or I wouldn't be able to take a loss. Right, I did not want to see green on my P&L, or red, I mean. I did not want to see negative in my P&L. And I don't think anyone does really. But I think one of the important things is, being able to take it now. Take it now. That's fine. Now, whether you take L's for a whole month, that might be a different story, right? I think we all have bad months. But if you keep on seeing red months and red months and red months, obviously something needs to change. For me, it was one bad week that blew my whole account, right? I had 2 whole months of actual good trading, good data, consistency, trading exactly using these levels, right? Actually following my rules. And then one whole week literally blew my whole account up. And the reason was because I did not want to place a stop. I did not want to be wrong. And instead of just taking, I don't know, at first it was 20% loss, right? That was a lot of money for me. I still didn't want to get out because I thought, hey, the market should come back to my position. And who am I to say that the market should do something, right? And then my account reached negative 50%. And I still didn't take, my stop loss. I was like, no, the market should reverse from here. And once again, who am I for me to say what the market's going to do? And then a couple days go by, and then I just see my account literally like negative 80%. And I'm just like, at this point, I don't really care. It either takes me out or I go back to my original position. And I think you guys can can guess what happened. I'm laughing about it now because I was 7 months ago. Just really dumb mistakes on my part. I could only imagine what my account would be right now, like if I kept on doing the same consistency and actually placing stop losses, right? So that's what we're doing here. I think what I'm learning here is when to take a loss, where to put your stop loss, why should you put it there, um, what's the best stop loss placement that you can actually do here based on price action, like why shouldn't the market go here? Not because what I'm saying, but because what price is saying, right? But if you're not able to read price, how are you going to be able to know where to put your stop loss? So, what we're doing today. And also, one of the things I have on my little thingy, my trading on the left side over here, you can see that never move stop past invalidation. Right? So this would invalidate our trade, right? Because we have our bullish fair value gap. Right? So we never want to see price come back down into here because that would go past the fair value gap. Same thing right here. We have the highest fair value gap there. Like very tight traders who have very tight stop losses could want it placed right there, but for me this works right here. It makes most sense to me, right? Because we still have more room in here. Right? But I don't really like having a lot in my chart. But yeah, that's what we're looking for. And I think one of the other things I'm going to be doing differently as well is I remember doing these evaluation accounts and funded accounts, and I'd see some success, right? I'd get to funded. I would be trading for 1 or 2 weeks and eventually blowing up the account, but that's over due to over leveraging. But I think one of the things I'm really going to really focus on is only using one contract, like how I'm doing right now, and really mastering being able to trade with one contract, right? Using a micro account. And the main reason for that is because let's say if I were to be able to take a trade like how I am right now, place or stop, which on an evaluation account 50K, I think you get to lose 2,000 in total before you blow the account. So 2,000 divided by 50. No way, that's 200 trades, right? So if we were to take, no. So it's 2,000 divided by 50. Oh, 40. Yeah, 200 would be crazy. So essentially, we're allowed to make 40 trades and lose 50 bucks. We're allowed to lose 50 bucks 40 times. Right? And if you're losing 40 times in a row, I think you might need to change your trading setup, but that's a lot of opportunities. But if we're able to take a trade, right? And this is where, our whatever it's called, risk to reward ratio. If we have a 3 to 1, right? So that's really good. But if we're able to trade like this on a micro, it's only 150, right? 303 ticks. I don't know how many points that is, but if we can capture moves like this on a micro account with one contract, imagine 2 contracts, right? This same 150, same points, same setup goes from 150 to $300. If we were to be able to master 2 contracts, we can then go to 3 contracts or 4 or 5, right? But what's the difference? Right? It's the same setup, same points, same market, but one's $150 and one's 300. Right? What's the difference? Well, I think when you get to that point, I think there's a big psychological difference where now you're thinking, oh, it's double the money. It's, I can get even faster to reaching my goals, right? Making money. But now you put so much constraint on your psychology where now you're only focused on this trade is going to make me lose this amount or I'm either going to win this amount. Right? So now you're thinking in terms of money. And I think once you start thinking in terms of money, that's when your trading is no longer making you money. So I think that's really important for people who are over leveraging already. If they're not ready for that, I don't think your psychology is up to date, and I don't think you're going to be able to handle that. So yeah, I think for that, I think we just take it slow. Be able to trade this setup. Get the same around the same amount of points every time. Right? It doesn't have to be perfect. An exact 150, but just target like that. And then eventually, if I'm able to do that for a month straight, or consistently at least, I'll go for 2 contracts. And if you do go for 2 contracts, and you still just want to target 150, right? Instead of targeting this, you can target with 2 contracts. This is all you need, right? And reaching from here to there is much faster than up here. I don't know the math on 3 or 4 contracts, but you would only have to reach right here if you were to use 4, right? But as a micro contract trader with only 1 contract, this is what we have to work with, right? So how can we get super good at reaching this amount of points instead of using one full mini, which is times 10 of this, and only reach right here, right? Because if we did one mini, this trade from 559 to what is this, 606? That would be 200 bucks right there. This little small move would be 200 bucks. And then you ask why you blew your account. Right? these two candles alone is gonna make you $200, right? Within 2-3 minutes. But those same 2-3 minutes, you're losing 200-300 bucks, and you lose your account, and you're pissed off on wondering why isn't trading working for me, right? So you can see how important risk management is, and not over leveraging, because you don't have that unless you have like $1 million in your account. Even then, that's still a lot of money losing in 2 to 3 minutes. So if you're not seeing success and you're losing your accounts too fast, I think that's probably top 3 reasons why on you're losing your accounts. But who am I to say don't do that when I'm also doing it? So I mean, I'm not trading like minis, but like still like I'm only building a trading strategy from scratch. So I don't know, I just felt like I needed to say that. But as we're coming to the close of this 3:15, 3:45, right? We have the last 15 minutes, and we'll see what happens here, right? Ideally, I do want to see this PM high get targeted at least. But it looks like we may or may not do it. But I think next time we are gonna trade the not the PM session, but the AM session. And see if we can find a setup there, because we do have right after 10 o'clock, right? So we're not taking any trades in here before this white line. Anything after is fair game, right? So when we first see this move up, we see a bullish fair value gap. Immediately, you know, probably me back then, I'd be like, oh, fair value gap, enter. You know, we've already gone a little bit lower. Let's target this high, and then boom, you're out of the game. And especially if you're in options, for sure, like you'd probably be holding on into here, no stop loss. You know, you're like, oh, market went back up, but time decay, and you know, even though my position's higher than when I entered here, you know, I'm still negative like 50% on my count. Like, how's that? How's that possible? And then you see another move down, and now you're down net minus 90%, and you know, at that point, you already shut your phone off. So I think there could be some setups that I'm not really taking advantage of here in the morning, especially since that's the most volatile. PM session can offer that, but not as much as the AM session. So I think that's what we're gonna do for the next trade. PM session today was it was pretty good. I'm not gonna lie, we had some pretty good moves. We had this move down, up, a little bit of consolidation, come back down, retracement into the fair value gap. Didn't touch the PM low, right? Reaction higher. Bodies of the candles closing below this AM low for some reason. It's being a little bit shy. We did find our little setup that we're trying to look for. Lower high, right? Taken. Boom. Two fair value gaps formed, right? We're looking to trade into that fair value gap. Boom. Now, once, right, failed, went to first present fair value gap, failed. Once again, into this fair value gap, higher, AM low, bodies of the candles closing, failed. Once again, down back into this fair value gap. Now we only have 11 minutes left, so that's not a lot of time. But we know how crazy the markets can get. You just one big fat green candle, and you're up 50 bucks. On a mini, you're up 500 bucks, which is really crazy. That's a lot of money in 1 minute. So yeah, I think we're gonna end it right at 1 p.m. my time, 4 p.m. Eastern Standard Time. Looking like a loss today, maybe. Could be that we recoup our loss, but let's just keep on seeing what happens here. So boom, right there. On a mini, you're up 100 bucks. Now you're down 100 bucks again. You were up 100, now you're down 20 bucks. Like, that's crazy to me. That's crazy. Because if if I was using a mini contract right now, I'd be like entering, exiting trades like crazy fast. I don't know, with the micro, I'm only down like 10 bucks. I get to stay in the game longer. And that's what you want. You want to stay in the game as long as possible because the game will eventually end. Can't play soccer for forever. You know, you have to take a break at some point to then go on to the next game. You got to take a break in between, you know, rest, think how you can practice in between that, how to get better. Make sure your body's good, your mental's good. Get back into the next game and perform and score a goal, win the game, right? You won't win all the games. Right? We watch the World Cup. Sometimes you tie, sometimes you win, sometimes you lose. Sometimes you score a banger and you celebrate that win and you're like, yes, exactly where we're going for. Or sometimes you get annihilated like 7-0. And that's fine. All right, so we close below this fair value gap. So I want to see what the lower one does. Wow. All right, so we touched this fair value gap, took out this lower high. This is our fair value gap now. So at this point, obviously, like our setup, potential setup that we're looking for, I actually formed at 12:53. So like 7 minutes left of trading. You know, it's not enough time. So I think that's why trading in the AM is a whole lot better since you have time on your side. You know, letting your trade be able to do what it needs to do. And even then, it could not work. Yeah, and if yeah. All right, so we're gonna log that. Let's see, so 50-50. Okay, so 57.5, right? And the result was negative 57.5. How many points? 0. So another loss. So now our win rate is 33%. You can see the rest of the results. But like I said, good thing this is a paper trade account. So we see the market touch this PM low. Body of the candles closing above this 1 minute fair value gap. So how funny would it be if the market then comes up higher after taking me out twice, you know? Like it's like the market saying like these two trades you might have lost, but you know, I'm trying to show you something. Like you're close, but there's still something that you need to work on. So 3 minutes being left on the timer. I'm really curious if the market just wants to what the market wants to do here. So we're just gonna watch for the rest. I'm actually gonna write some notes before I forget, and I'm too lazy to do it. So wow. Okay, we're gonna write it here. Right. So just looking at the PM session. we have a high and low. Let's see. So what I was looking for, right? So what I was looking for was a lower high get taken out and a fair value gap for higher prices, right? So that's what we're looking for, right? So we're looking for this higher low or lower high, and a fair value gap. Right, so we have fair value gap. Ideally, it was right here. Price, it did technically initially worked, but got resistance, I guess, on first present fair value gap and no, first present fair value gap in PM session and AM low of today's trading. So we have first presented fair value gap and AM low. You see the bodies of the candles closing below that. Price afterwards went to PM low, back inside 1 minute fair value gap and equal lows, taking out liquidity and then going back to first present fair value gap of PM. We got stopped out twice. First trade being completely wrong. Going short based on feeling, because I felt like the market was going to go down. But then it just went straight up. Then we got stopped out after fair value gap of break of structure. It went to liquidity first by PM low. And with that being said, I'm going to end it there. Today was not the most successful day, but we did get data, which is the most important thing. And this is only day number 2, right? So three trades, and we're doing a total of 20. So we'll see what the next trades bring us. But with that being said, thank you guys for watching. If you guys found anything insightful, I'm sure I'm going to post a video of this later today. And yeah, good luck with your guys' trading.